Yeah, hey there, it's Paul here from freedomtraderpro.com. Now, in this video, I want to talk about how is a candle made in Forex trading. Okay, if you're brand new to this channel, please consider subscribing. I put out a couple of videos each and every week to help you move forward in your Forex journey. But in this video, I want to talk about how is a candlestick made in Forex trading. Now, what I've done, I've basically drawn out a couple of candles here, and I want to explain what each part of the candle is and the relevance of that, okay? Now, we've got a green candle, which is normally a bullish candle, and a red candle, which is normally a bearish candle. Now, you can change any of the colors if you're using TradingView. You can use any of the colors. You can change any of the colors that you want to. For instance, if you look at my charts here, I use blue for a bullish candle and black for a bearish candle. That's just what I like to do. That's just how I like to have my colors set out on my chart. So you can change them however you want to, okay? But for this example, I'm going to have a green candle for a bullish candle, which is a candle that's going up in price, a red candle, which is a bearish candle, which is going down in price, okay? Now I'm going to explain each part of the candle, each part of each candle here. Now, we've got four parts really to each candle. We've got the open, the close, the highest price, and the lowest price. Now, each one of those things is kind of made up, is what makes up the candle, or each candle, should I say. So let's just say we've got these four things here, okay? So this is pointing to this. Let me just move them in a little bit so you can see exactly what I'm pointing at here. I'm going to do the same on this one as well in a minute. So for a bullish candle, for a candle that is going up in price, it's going to open at the lower point. So this point of the candle here, the bottom, the base of the candlestick, is the open price, okay? So this is the open of the price when that candle started. Now, it's irrelevant whether you're on a 15-minute, a 1 hour, 4 hour, daily, whatever candle you're on, this is the open price of that candle at that particular point in time. So if it was a daily candle, that would be the open price of that daily candle. If it is an hourly candle, it would be the open price of that hourly candle. Okay, and the top of the candlestick, or the top of the candle here, is the close price. Okay, now these the bottom of the wick here is the lowest that price got to in that time frame of that particular candle. So if this is an hour candle, for instance, this would be the open of it, this would be the price it closed at, this would be the lowest price that the price came to during that hour, and this would be the highest price that it came to in that particular hour, okay? So you've got your open price here, which is the base of the candlestick, your close price, which is the top of the candlestick, lowest price, which is the bottom of the wick, highest price, which is the top of the wick. So if you get something with a really long wick, that just, well, all that means is price has spiked up and come back down within that candlestick. So if you were to look at the same on the 15-minute, you would see, let's just say this one here, what you would see potentially is price come down, step down with more candles, and then move back up. Obviously on a 4 hour or 1 hour candle, it just moves down and back up within the same candle. Now I'm going to show you this on the charts in just a second, so you can kind of hopefully understand a little bit more about it. But let's just do the same on this here. We've got the same four points on the candle, but they'll be in reverse. So a red candle is going in a bearish direction, which means it's closing lower than the open price. Okay, so the open price in this instance would be here, and the close price would be lower. So it opens here, it closes here. This is the highest price, again within that candle, and this is the lowest price within that candle. So these are the same. The highest and the lowest still represent the wicks of that candle, which is the same as a bullish candle, as a bearish candle. They basically have the same relevance. Obviously a green candle, the open is at the bottom, close at the top. A red candle for a bearish candle, the open is at the top, the close is at the bottom. Okay, so hopefully that makes sense there. Now, I'm just gonna come here and I'm gonna put on a 4 hour, let's just say we've got a 4 hour chart. And what I'm gonna do, I'm gonna actually move the, I'm gonna actually come back here. Now this candle here, I'm looking at this particular candle here because it's got a big wick on it on the 4 hour. Now let's just see actually if I can split the screen. So I've just brought up Euro USD on 2 time frames side by side. This side we've got the 4 hour on this side here, and on this side we've got the 15 minute. I'm just going to show you how they kind of, how a 4 hour candle is displayed, if you like, on a 15 minute time frame. Now I've cut this one back and I've picked this candle here because I've got a very, very long wick on this candle, which means on a smaller time frame that price will actually step down and then step back up, because you've got the open price here. It actually comes down here, which is the lowest price, and then the closed price is up here. So I'm going to mark this candle out on this side. As I say, I've put this back here so that you can't see any future candles, but it doesn't actually do it on the 15 minute on this side, but I'm just going to mark it off. So let's just say, let's just get a couple of, let's get a vertical line. This candle opens at 6 p.m. So we've got, let's just, 6 p.m. is there. And we can set the close price as 10 p.m. Okay, so we've got the 4 hour candle here, and everything in between these two lines is basically what is represented on this 4 hour candle on the 15 minute time frame. So everything in between here, okay, makes up this 4 hour candle. Now, as you can see, let me just, visibility, let me just turn these off on the 4 hour time frame. Let's turn this one off as well, just so that you can kind of see what's going on a little bit more. So you can see price opens here, it wicks down, and then price moves up. So you can see price opens here, it wicks down, which on the 15 minute you can see it stepping down, and then price carries on moving in a bullish direction, and then it actually comes to the high, which is here, and then actually retraces back a little bit, which is what is giving us this little wick here. Let me just expand that a little bit so you can see. Price opens here. If I just line them up roughly, it wicks down, which is this big wick here as well on the 15 minute, but you can see it stepping down, it wicks down, and then price moves up, and then it actually retraces a little bit before the end of this, before this line here, which is what is giving us this little wick here. So we got, that's the wick there, you see. As you can see, the wick there keeps moving me out of the way. Right, we'll get back there in a minute. This wick here is represented by this price action here. As you can see, it goes up and then just pulls back, which gives you the wick on the 4 hour, but obviously on the 15 minute, it's separate candles, and the same down the bottom. I mean, we have got quite a large wick here. I mean, if you come down to a lower time frame, let's come down to a 5 minute if I can find it. There it is. You can see now it's stepping down on the 5 minute time frame, creating these big, long, bearish candles here, and then price is moving up again. So if we highlight the wick on this side, if it's going to do it without moving us off too much, as you can see, that's the wick. So price opens here, it wicks down, comes up, and then retraces back. So this bit of here is the wick on the 4 hour, and this here is the wick on the 4 hour. So as I say, hopefully you can see how each time frame kind of creates a story for the next time frame, if you like. So the 5 minute will lead into the 15 minute, which leads into the 1 hour, 2 hour, 4 hour, you know, whatever time frames it is that you use. Each one tells a very slightly different story. So hopefully by drawing the candles out and explaining what's what, you can understand how the candles are made up and kind of how all this fits together. So anyway, that's it for this quick video. If you're brand new to this channel, please consider subscribing. I put out a couple of videos each and every week to help you move forward in your Forex journey. So that's it for this video, and I will see you again in another video real soon. Take care.